How do you quickly do a quick and dirty underwriting of like a large apartment complex? Let's say, for example, we're doing, say, 90 plus units that we're underwriting. And how can you look at a lot of deals and then be able to cipher it down to the few that you actually go after? And so a little bit of the trade secret is I've hired somebody out third party that I give all the information to. When all the emails come through my email, I'll send it off to them. They're downloading all of the financials that are coming through for those deals, and they're putting them together in a quick little spreadsheet, little single Google spreadsheet that we have that kind of breaks it down for me very quickly so I can then dive in and get a quick and dirty on the deals before we kind of say, okay, yay, nay, okay, let's dive in further and really analyze it and throw it into our detailed model to go after it. So I want to kind of showcase that quick and dirty today, kind of show you what I'm looking at, little details to kind of give me a quick look at a property to see if it really makes sense for us to dive deeper into it. So here we go. So the main ones being, we're looking at this thing on a multi-year trend for, say, the current, right? And what I'm looking at when it says total potential income here, what I mean by that is when you take out the gross income, less any vacancy, less any bad debt, concessions, loss to lease, you're adding in all the other income. So this is essentially my effective gross income, total potential income on the building. That's the number we're putting here. And then we'll use the expenses that are shown on, say, the T12 or the rent or the profit and loss statements provided to us to plug that number in here. So we're getting a current look at the property here for what it actually currently is today. And then we're beginning to draw in some of our projections based on some of the variables. Once we do a renovation on the property, what does it look like, right, after, year one, year two, then we come into a refi year. Once we've renovated the property, now we're gonna refinance it. What does that year three look like, 4 and 5? So we're running a 5-year trend on it, very current, just straight down the line, and we're looking at total potential income. Then you have your expenses, that's getting your net operating income. We're taking in some reserves that we take into the property. Usually that's about $250 per unit per year. So that comes in here. Asset management fees, and then we look at our debt service, okay? That's gonna now get us our actual free cash flow on the property, okay? And then some little metrics we're looking at is cash on cash returns, gross rent multipliers, GRM, and then giving us some estimated values based on, say, a cap rate of 5%. What does that look like? Debt coverage ratio, which is DCR, right? And then we're looking at our break-even occupancy, because what we want to look at is, ideally we underwrite to a 75% break-even occupancy, which means we can take a 25% hit on that building through economic losses like vacancy, loss to lease, bad debt, concessions, all of these things in a bad market, and still be able to cover all of our expenses, property taxes, insurance, debt service, all of that stuff. So we look at that because I'm always looking at how do we protect the downside, right? Anything, the market will do the upside. How do we protect the downside in a bad market and do the best that we can to protect ourselves and our investors in the asset? So break-even analysis and then cap rates. So that's how we're kind of looking at it on a year-by-year basis, right? Whoops. There's technology stuff here. I don't know what's going on there. But some of the variables, you can see it, pretty much all of the blue stuff in here is what we're plugging in. And then the formulas are in all the black numbers. Some metrics that I'm looking at really quickly is kind of our equity multiple in terms of what is the equity we're going to provide back to investors over the life of the project. So in this case, say it's 2.45. So if you give me $100,000, I'm giving you $245,000 back over the term of the project, which in this case is, say, a 3 to 5 year deal. Other things I'm looking at. Obviously, these numbers aren't accurate at the moment because I got to plug in some other ones. IRR, okay, average expense ratios, cash on cash returns, the break-even point on average for this building right now, right? And then we start plugging in some other assumptions and variables such as our price, net square footage, units, all these stuff. So everything in blue we're plugging in. Everything else is kind of our metrics that it's pumping out. We're looking at our 75% rule. We're looking at our 1% price per unit rule and how that works, right? Our return on cost. So for every dollar we're putting in to renovate the property, what is our percentage return on that? So this is pretty good. And we have conditional metrics in here. So everything in green is good. Everything in red is bad, or things that we need to look at closer. And this is breaking it down for, okay, when we purchase the property, showing you our LP and GP equity, loan amounts, closing costs, capital improvements, and so forth, the price of the property, etc. Then we're also looking at that on a refinance basis. So hey, when we refinance the property, what does that look like? What does our loan look like, etc. And then lastly, we're looking at it when we sell the property. What is the sales price expectation, closing costs, all the other things out the door. So those are the things we're looking at there. This is a single sheet. So like I said, if you go in and go into the Google Sheets, the whole thing kind of looks like that, right? Obviously I'm looking at it a little bit closer, but it's got different variables I can look at it on a real quick and dirty look. And I say, okay, like this thing's kind of fitting some metrics we're looking at. I need to dive deeper. So that way he can, my underwriting guy can go up there and put 20, 30 deals up. And then I can go in there and underwrite these things further and get into details and throw them into our detailed model that's really analyzing it all the way down to the kind of the dirty part of it, like the real detail part of it. We're plugging in current rents, right? The counts, the unit type, post-reno. So hey, once we renovate this thing, what does the rents look like for the building? Right, so we put those in. That obviously calculates monthly and then annually. We have a square footage here, then that's gonna pump out a rent per square foot currently. And then how do we compare that to post? And then I'm taking that when I dive dirty into these things and kind of get into the weeds, how does that compare to the comps in the marketplace? And I can kind of match things up and say, okay, price per foot for a reno project is this, and this. We're not too out of line. Where's the new construction, right? What does that price per foot look like on the new construction properties? Because we need to sit about 20 to 25% below that post renovation to have our deals make sense, because otherwise someone else is gonna go rent a Class A building that's fully new, brand new construction versus say our Class B stuff. We want to make sure there's enough of a delta there that makes sense post renovation. I wanted to kind of walk through this, kind of how we look at it and how I'm able to see 20, 30, 40 deals at a time very quickly, analyze them, and then I'll cipher that down into say 2 or 3 that actually makes some sense for me to spend 2 to 3 hours on them, which is what it takes to dive into the weeds with our detailed model and really walk through it before we're submitting a letter of intent and other information on a particular property and an asset. So I hope this makes sense. A lot of details and information, but I've had a lot of people ask me, how do we kind of analyze deals? And we start at kind of a 10,000 foot level, analyze those on a quick and dirty basis through this, and then I'm diving deep and then putting a few of them into our detailed model, which takes me a good couple hours going through it and really analyzing those things. Hope that makes sense. We'll talk to you soon. Take care.